Let me show you how to make 20,000 US dollars each and every month from only a $500 trading meme coins. Yes, I understand this really sounds like a crazy dream. A lot of you can't really get the mathematics behind it, but in this episode I will show you how possible it is, and I'm going to show you all the secrets, the blueprint, and everything that you need in order for you to make that 20,000 US dollars per month using $500 worth of trading capital. Now that's too much power, way too much power. So before the naysayers go crazy in the comment section, here's a little bit of mathematics that you need to understand. So remember, we are using $500 on a daily basis and we are going to compound it. But one thing that you have to understand is the bigger amount that you have, the better it is when it comes to your risk to your reward ratio. Okay, so in this particular instance, right, the sweet spot of your total overall investment when it comes to trying to get rich off of meme coins is going to be about $5,000. If you guys do not already have 5,000 US dollars to trade with when it comes to meme coin trading, you're really going to have a tough time. Okay, however, it is possible to start with little amount of money, smaller than the 5,000. You can start with the 1,000, you can start with the 500. It doesn't really matter. So the reason why I stick with 5,000 US dollars is because of the risk to reward ratio. So remember, when it comes to trading highly risky assets such as meme coins, right, you're only supposed to use 10% of your overall portfolio per trade. Okay, so 10% of 5,000 US dollars is $500. And this is one of the reasons why I am giving you $500 as the base, trading allocation per trade, because you're only risking 10%. However, this can work on any amount of money. If you've got an overall portfolio of about $1,000, right? 10% of $1,000 is $100. So basically, if you do the math, you can use $100 per day, compound it in about 30 days, you're going to have like very good amounts of money. So I really hope that you guys are clear with the risk to reward ratio and how to calculate. So basically, use 10% of whatever overall portfolio you have, compound it on a daily basis, and you guys are going to be good to go. So anyhow, getting back to our strategy, right? So our strategy is going to be earning 10% per day of our overall portfolio. What we need to focus on a daily basis is making a minimum of 100% of our money. So if you are trading with $500 per day, right, it means you are risking 10%, which is about from 5,000, gives you $500, right? And then each and every day, all you have to do is make 100%. So every day you make 100%. So on the first day you have $500, right? You make 100% profit, meaning you've got $1,000. Tomorrow you are going to be able to trade with $1,000 and make 100%. Now you've got $2,000. The other day, $2,000 multiplied by 2, that's $4,000. 4,000, just like that. So you are going to be gradually compounding your money and going aggressive with it. Okay, so this is a very aggressive methodology which is going to help you attain your results. And if you compound the $500 per day, right, in the next 31 days, as you can see on the screen, you're going to end up having 20,208. That's going to be your overall money which you're going to compound. Now, this is a very, very effective strategy, but one of the things that you have to recognize and realize is with time, right, as your portfolio keeps on growing, the liquidity and how you're going to play the liquidity game with regards to the meme coins that you're going to be trading is going to be different, because your budget is going to be much more higher and the liquidity requirements are going to change with time. So now that we have gotten that out of the way, now you understand where the $500 to 20,000 US dollars comes from, then let's now talk about the essential things that you need to identify and be very good at. So number one, the first thing that you need to do is you have to identify the meme coins to trade. You have to use the best filters. You have to have different screens, etc., because the different filters are going to allow you to have access to meme coins that have got different liquidity zones. So remember, when it comes to filters, right, change the filters as per occasion, because different days are going to have different opportunities. Okay, and as a rule of thumb, right, what I usually love teaching my students is, as a meme coin trader, you're supposed to have maybe about 5 different filters when you are having your trading sessions, because different filters give you different accessibility to different meme coins. So sometimes you're going to have fast or rather high volume meme coin filters. You're going to have meme coin filters that are going to be giving you subpar type of trading opportunities, and you're also going to have meme coin filters that really give you like 1000x opportunities. So make sure you understand that filters need to be used for different occasions, okay? And for each and every trading session that you're having, right, have different screen monitors. So what I usually do is I trade with about 5 different monitors. On monitor 1 there's different filters, monitor 2 has got different filters, so that I can have access to like a diverse opportunity of meme coins in a particular trading session. Okay, then the second thing that you need to know is in order for you to decide to keep a trade, you have to figure out when to exit and when to enter, and when it is and when is it appropriate to hold on to a trade, because exiting the markets is going to give you profits. Exiting the markets is going to de-risk you, because there's going to be a little bit of danger. And on my YouTube channel, right, we've been talking about block 0 and the sniper order blocks, and these things are going to help you have support and resistance. So if you go to my YouTube channel, by the way, subscribe to my YouTube channel. If you guys are not really part of my YouTube channel, you guys are going to be able to see the different strategies that help us understand when to keep a trade and when not to keep a trade, when to basically exit. The last thing that we're going to talk about as we continue this episode is obviously having the best tools to automate your trade efficiency. Trade efficiency is very, very vital. As a human being, you can only do so much. But if you've got specific trading tools, like for example, in my case, I usually use Sniperoo trading bot. Sniperoo trading bot allows me to automate a lot of my trades, and then automation is going to allow me to exit at certain specific areas. And the Sniperoo trading bot has got very good trading features such as a trailing stop loss, a static stop loss, and automated take profit zones. You can take profit at a 1x, at a 2x, at a 10x, at a 100x, and you can easily be able to customize it because you definitely have all this power right over here. And this is one of the reasons why you have to check out the link in the description box below. So if you guys are not really part of Axiom, by the way, we are going to be doing most of our trading on Axiom in conjunction with Sniperoo. So check out the links in the description box below, right? It's going to redirect you to axiom.trade and Sniperoo. These are the essential tools that you're going to be using. Do not trade on bullx, do not trade on Photon, because you are definitely not going to be able to keep up with professional traders like me. So, there's a saying, a carpenter is only as good as his tools. If you've got the bad tools, if you don't really even know how to customize these tools, you are basically not going to be able to survive in this game. So remember, the links are in the description. These are my referral links. If you use them, I'm definitely going to have like a little bit of a kickback coming my end. So yeah, without further ado, let's jump into this. So I hope you guys are ready and you understand where we're going. So number one, how do you get to identify the meme coins to trade, and what are the best filters to use? So when it comes to the issue of filters, right, I told you, as a meme coin trencher, you need to have about 5 different monitors with 5 different filters. These filters are definitely going to be giving you trading opportunities. So what I usually love focusing on is the high volume momentum plays. The high volume plays are going to give you the highest odds of winning. You're going to have about, you know, like a 75% chance of winning. Yes, filters do matter. And if you're very good at tweaking your filters, you're basically going to be winning most of the time. So you have to customize your filters according to your strategy and according to your setup and according to your schedule, if I can put it that way. So anyway, in case you guys are looking for pointers, right, go for high volume, slow build up, and high volume, fast build up. So if you talk about the fast build up in comparison to the slow build up, right, the only difference is the time factor, because number one, you're looking at high volume coins that have got like a slow build up and high volume coins that have got a fast build up. Like for example, the maximum time with regards to these filters is the difference in time. So with regards to the slow build up, I go for a maximum time frame of about 40 minutes. And when it comes to the fast build up, I go for the maximum time frame of 5 minutes. So when you go on axiom.trade, use this on the final stretch and just be able to like configure them. Okay, so when it comes to the volume and the market cap, these are the formulas right over here. And in case you guys are wondering, like, okay, how do you get the market cap? The market cap is 0.5 multiplied by Radium graduation threshold. So in case you guys don't really know what Radium graduation threshold is all about, this is basically the level at which, you know, coins are graduating from pump fund to Radium. So in this particular case, it's around 28,490. So when we do that, right, in order for you to get the market cap value, just multiply 0.5 multiplied by 28,490. Then you guys are going to be able to get your figure. You put it out on your market cap. So when you're putting your filters, go to Axiom and then just, you know, filter it out here. You put whatever digit is there per day. So each and every day you're going to be able to like configure these things on a daily basis. So when it comes to your market cap, that's the formula right over here. Okay, so guys, please write this formula down so that you do not ever get to forget you know, these things. All right, so we've got two setups: the high volume fast build up and the high volume slow build up. So when it comes to the volume, 0.7 multiplied by the Radium graduation threshold. So 0.7 multiplied by this amount right over here, you're going to be able to get your volume. So like I told you, right, the most important thing when it comes to the high volume setups is the difference in time. So if you're going for the high volume fast build up, you're going to have your maximum time frame as your token age. By the way, this is just the age of a particular project. So this is going to be the token age. Okay, that's the duration of how long it has been in existence, the maximum time frame. So when you go on Axiom Pro, you go on audit and you simply go on the age right over here. You're going to put 40 minutes. Okay, that's for the slow build up, and then for the fast build up you're going to put 5 minutes. Now one thing that you have to recognize or understand is these fast build up setups really do not occur on a daily basis. Like, it's very rare. Okay, so most of the trading opportunities that you're going to come across are going to come from the high volume slow build up, because you have enough time for the play to sort of you know, kick in. You get my point? So when it comes to fast build up setups, it's going to be once in a while. However, the fast build ups are going to be able to give you a minimum of about a 10x, a 10 to 100x. You understand? These are going to be the ones that are going to be explosive. However, the filters are not really going to be giving you that many opportunities, because you're going to be able to like wait days and days. And this is one of the reasons why it's very important for you to have different monitors, have different computer screens, so that you can have different setups, you know, so that you can always have trading opportunities. So when it comes to the high volume slow build up, you're going to be able to have a minimum of around 2x to about 5x. Okay, so what we are looking for on a daily basis is 100%. That's all we care about. I don't really care, you know, how long it takes for you to make 100% in a day. Maybe you might be doing 20%. per trade. If you do 20% per trade, right, you have to have 5 trades giving you 20% in order for you to get to 100%. You get my point? So whatever you do on a daily basis, I don't really care. All that really matters is that 100%. Even if you get 5% profit, if you get 5% profit, right, you have to do it 10 times in a day, so long you get 100% profit. And by the way, 100% profit with these filters is very attainable, because these filters are going to be giving you trading opportunities that are going to be between 30,000 US dollars all the way up to around 200,000 US dollars with these setups that I just shared with you. So you tell me, are you meaning to tell me that on a daily basis you can't find a trading opportunity where you get to buy a coin at 30,000 US dollars and you sell it at 80,000 US dollars? Are you telling me on a daily basis this is hard to do? It's not. If you go on Axiom Trade right now, you're going to see a lot of projects that went from 30,000 all the way to around 200,000. You're going to see maybe 5 opportunities on a daily basis, but you have to be dedicated. Dedication is very, very important. So this is one of the reasons why you have to understand the blueprint. Okay, it is absolutely doable. So now that we've talked about the filters, you already understand the formula, you already understand the blueprint and how you're supposed to get in, right? Now you're supposed to figure out point number 2. Know when to continue staying in a trade and when to exit. And this is a point where the Sniperoo trading bot really comes in handy, because if you set it up properly, right, if you go to the transaction settings, you can easily sort of share your, what do you call this, the trading strategies right over here in terms of your take profit areas, and it's going to be easy for you to get to do your thing. So if you go to your Sniperoo, and I'm assuming you've already installed it, right, it's very easy for you to go to the strategy and you sort of put your greed, take profit, and the trading stop loss settings right over here. So you can put 8x, you can put 10x, etc. We're not really going to jump into that, but I'm going to explain it a little bit later. So anyway, getting back to our point, right, as far as your take profits is concerned, right, one thing that I keep on teaching is block 0 and the sniper resistance and support levels. So let me just put this out there for you guys in case you haven't been following my YouTube channel. So one thing that you have to understand is there's resistance and there's also support. So as far as your take profits is concerned, right, you have to figure out which levels are being controlled and which levels are signifying a loss in momentum and which levels are signifying a bullish continuation pattern. So when it comes to the overall setup, right, most of the times when a coin is launched, it produces such a graph. Okay, the first level that you're going to see immediate resistance and support, right, this is the level that you're supposed to always look out for. So you've got support right over here and you've got resistance. Okay, so remember, whenever a meme coin is being created, right, there are 2 specific players that are very important, and these are the ones that I'm referring to right over here as the block 0 and the snipers in the first order block. So basically when a meme coin is created, right, block 0 is dominated by the token deployer, somebody who deploys the meme coin, right? This is going to be represented by block 0. The snipers that get in, the snipers that purchase right after block 0, these are very sophisticated individuals that are sniping pretty much everything, right? And the combination of these 2, right, the deployer, the token deployers, and the sniper after block 0, after he deploys a meme coin, right, these guys are going to set the standard for the initial support and the resistance. So what usually works for me is getting to figure out where the support is and where the resistance is as far as the snipers and the token deployer are concerned. So these guys are going to set the trajectory of what's going to happen. So usually when the token is created, right, it ends up maybe running up to around maybe 60K, and then you know, the token deployer, the developer sells, and also the snipers exit, and then it maybe drops to about 30K. So once you see that this level has been reached, right, you've got your roof and you've got your base. 60,000 is your resistance, 30,000 is your base. So what you're supposed to do is wait for the price to continue having a bullish continuation pattern. Okay, wait for the price to sort of push up and sort of get rejected by the resistance, come back and then push back up and then come back down to the support level. Okay, once that is identified, right, you're able to now figure out that, okay, this particular level is acting as support. And this is not going to happen in this particular order each and every time. But all you have to understand is the 30,000 level is going to be your support level. So wait for the price to sort of gain support right over here and maybe go back up again, have a second retest, and then continue going up and then come back down. Wait for the support to be established and buy as close to the support as possible. So once you see volume starting to build up right over here, right after the roof, which is the resistance has been established, wait for momentum to come through on the support level as far as the block 0 and block 1 snipers are concerned. If you get to purchase after the support has been established, and if you usually try to target the order block the order block on block 0, you guys are guaranteed to make 100% on a daily basis. Okay, once you get good at identifying when the bullish continuation after the support has been established, has been created, then you guys are going to have the best entry possible. If you rinse and repeat this strategy each and every day, worst case scenario, you're going to be able to get 100%. So now your question is supposed to be, hey Muna, how do I get to identify that, okay, support is established and there's a bullish continuation and there's gonna be more momentum created? So usually trading is made up of fractals. Okay, so without really being too technical, right, a fractal is just a repetition of a smaller time frame on a bigger time frame. So whatever happens on the 1 second time frame, it usually happens on bigger time frames, aka the 4 hour, the daily, even on a weekly time frame. So there's always fractals. So what I usually do is when trading, I'm trading smaller time frames. I'm trading 15 seconds. Okay, 15 seconds. I'm also trading maybe 1 minute. Okay, 1 minute, which is 60 seconds, and I'm also trading 3 minutes. So 3 minutes is going to be my highest time frame. So when I see that momentum is picking up on the 15-second time frame, then I know that for sure I'm able to go through. So let me give you a practical example. We can use a coin. These are the graduated filters right over here. So let me show you something that has already happened, and then you guys are going to be able to identify the block 0 support resistance levels that we have been talking about. And this is what is going on right over here. So this one, let's go to the 15-second time frame. So as you can see, right, it popped up on our filters and it's really doing very well. Take a look at how explosive this has been. So do we have any other smaller time frame right over here? So in my opinion, this right over here is the initial support and resistance level. So before I even get in, I already know where the support and the resistance level is. I'm looking for an entry right over here. So when the price comes back down to this level, I'm looking for a retest on 80,000 US dollars. Okay, maybe it might come, it might not happen, and all that stuff. So as we go in, right, we have to keep on clarifying and verifying that this information is going to happen. So as you can see right over here, the price is very likely to hit this initial block 1 resistance. So let's see how it plays out. So I'm not really going to get into this trade because, I'm just giving it to you as for illustration purposes. So what's going to happen is at some point, you're going to see the price come back down like clockwork. This is going to be an amazing thing which is going to happen. The price is going to come back to this level and hit the support, the block 0 support level. But this one looks very feisty. It looks like it has got a lot of motion. So in cases where it has got a a lot of momentum, right? If you are patient enough, the price is going to come back down to the initial support and resistance level as per block zero. But sometimes there are situations where it's just so bullish and it can't happen. So what you do is you create another support resistance type of level. Okay, so now imagine this level that we talked about right over here was the first one, right? Okay, because the block zero and block one are in different phases. You've got the first level, and you also have the second level. So what you're supposed to do, for example, in this case, maybe the support and the resistance level is going to be retested on the second level because you've got the first level and the second level. But according to my experience, right, the first level is the most lucrative one. It's the most practical one. You get my point? It's the safest. If you go to the second level, right, and you sort of rush to get in, what if the price ends up coming back down? So this is one of the reasons why I usually only trade the first level of support and resistance, and I managed to get in. Okay, so in this particular case, right, we obviously saw that the momentum is really, really good and the price is going up high, and you could have also played this one. Okay, so if you had a lot of conviction in this particular trade, right, you would have obviously entered right over here because this is the retest of the support that we were talking about right over here. Always try to get in on the retest of the support level. So in this particular case, it looks like this coin is very bullish and people are trying to get in. However, no matter how bullish it is, on a personal level, I really find that getting to buy it on the first level of support and resistance is going to yield better results. Okay. However, if you feel like, okay, I need to FOMO and I need to get in, take a look at how many opportunities you had to get in. Okay. You had a second retest right over there, which was a very good opportunity. And if you take a look at the price point right over here, it pushed up around 112. And by the way, this is a real-time illustration for you, okay? Meaning my trading method does work. All you gotta do is understand which level you can sort of get in, the first level or the second level. So how do you determine whether you're supposed to FOMO in on the second level? You just look at the volume, take a look at the price, and take a look at how much volume is being traded. Okay, if you do that, it's gonna play out and you guys are going to end up doing very well. However, as you can see right over here, this is obviously the end of this particular pump. So if you missed selling out at this particular top, right, then you're obviously doomed. And this is one of the reasons why I do not like entering on the second level of support and resistance, because you have to be extremely fast. I would rather go for such an entry. You know, if the price did what it did on the second level, but on the first level, I would have easily gone for it and all that good stuff. But sometimes, you know, with time, you guys are going to be able to identify and be able to understand what is going on and how you're supposed to sort of you know, continue adapting and just basically doing what you have to do. So as we are waiting for the price to come back down, trust me, sooner or later the price is going to come back down to this level. It's going to happen. It's just a matter of time. Now the question is, do you have enough patience to wait for it? So as you can see, the price is falling, and yeah, let's give it some time and then we'll see what is going to happen. In the meantime, let me just explain something which is also very, very important when it comes to the Wyckoff schematic. So most of the times you guys are going to be familiar with Wyckoff schematics, which is obviously the distribution, accumulation, and reaccumulation, redistribution. Okay, so for example, right over here is a classic Wyckoff distribution schematic. It's happening right in front of our eyes. If you guys are very good at the Wyckoff strategy, then you guys would have understood that, okay, this was game over. So remember what we spoke about, right? The filters that I told you are most likely going to give you coins that are going to push up all the way to around 250 to about maybe 300,000 US dollars. So this is one of the reasons why this trade is most likely the end of this trade. And in case you didn't take any profits, you should have done so and you would have gone in. So right now I'm just waiting for the price to come back down. So as you can see right over here, the price is respecting the previous support and the resistance levels, but it's running out of juice. So this is it. This is what you are witnessing right over here as more loss in momentum is concerned. So as you can see, right, let me even extend my line of resistance and support right over here, because I want you to know that the price is going to respect these levels. It's going to come back down to around close to 75,000 sooner or later. This is happening in real time. I'm not a fortune teller. This is all based on mathematics and the experience that I've got. So right over here, right, if you're feeling risky enough, you could have, taken a trade right over here in the second level of support and resistance, but it's not really a good idea. It doesn't end very well. So wait for the price to come back down. Before you even decide to enter right over here, right, you might be too late for the trade. So this is one of the reasons, in my opinion, right, I wouldn't go for this trade, because, hey, what if the trade concluded right over here? What if the most important people already exited this particular trade? Why would you want to enter? So this trade, I would skip it if I were you, because it didn't give me enough opportunity to enter in the first level right over here. I would have, the best scenario was for the price to do this, then push up. Then I would have taken that particular trade. I want to make sure that I understand where the block 0 and block 1 snipers are exiting. So in this particular case, right, they were exiting this level. And this is one of the reasons why entering either here or there on the second level would have given you 100%. Okay, so most likely now the price is about to come back to this level sooner or later. We do not really know, but eventually it's going to come back and respect this level. The reason why I was able to identify this level is because I know where the support and the resistance level is according to the block 0 and block 1 entries. Okay, so anyhow, let's go back to our conversation right over here. So remember, be very good at momentum trading. Understand when to be able to read, decipher loss in volume and increase in volume. Increase in volume is going to coincide with bullish continuation. Decrease in volume is going to coincide with a loss in momentum, which signifies an end of trade. Okay, you're not supposed to get in if the trade is, if it's not doing its thing. You're supposed to wait for the bullish momentum to hit, and that's when you sort of get to continue. So now let's take a look at the chart. What is happening right over here? It's still losing momentum, and we were able to pick out. So for example, if you took this trade, right, if you took another trade right over here, you would have made another, what do you call this? This could have been a 65% price increment. So right now the price is being sucked towards this level. Okay, so if you understand this concept, right, you're going to be able to manipulate it to your liking. Personally, now that everything has happened, all this loss in momentum has happened, do you think it's going to be a wise decision for me to enter here in anticipation for the price to go up? I wouldn't want to take that type of risk. I would rather, I would have rather entered when it performed like that and then pushed up. You get my point? Then you take that particular entry right over here. So just like I predicted, just like I told you the price was going to come back down close to 78,000 US dollars. Where did the price come back down to? It came back down to around 90,000 US dollars, and right now with clockwork it's going to hit this 78,000 US dollars. So if you had to trade it, you could have put your stop losses right over here. Your entry could have been in this particular box and you could have done your thing. So now the question stands: is there enough juice for us to sacrifice our hard-earned money and hope for the price to go back up right over here after entering in this particular level? Of course, there's gonna be like a little bit of a reaction, but I don't really know how high it might go. Sometimes the coin ends up getting ragged right over here because the people who deployed the project obviously made a lot of money right over here, and this to them is not really as lucrative. So maybe we might see the price and the coin get rigged. So right over here, right, our entry could have been around 89. Take a look at this. If we enter right over here, we could have done obviously like close to 60% already, just based on this particular trading methodology that I showed you. You understand? So this is one of the reasons why these things are very powerful. So the more you continue trading, the more you continue interacting with the trenches, this strategy that I'm teaching you right over here is a very powerful one, and you're going to see it manifest. It's going to manifest and appear on your radar on a daily basis, and instinctively you're going to understand when to strike and when not to strike. So I didn't strike on this particular level because to me, I've already lost out on a lot of momentum. There's already distribution that happened here. It already happened here. So why would I want to get this one? You understand? And if I was really chasing for a bag, right, I would have entered on the second level of support and resistance. So be able to identify different levels. There's a first level of support and resistance, second level of support and resistance, perhaps third level, and all that stuff. But the most safest that you can enter is finding the first level of support and resistance. You understand? So this is one of the reasons why these things really, really do matter, and they do help. So if you ended at 93, we almost hit 100%. This is about 90%. So remember, on a daily basis, you're only looking for 100%. So you already got a 60%. Next trade, you're only down to about 40%. And once you get your 40%, you close your trades for the day. Because if you overdo it, you guys are going to be in trouble. You guys are going to end up making losses, etc. Now, take a look at that. Clockwork right in front of your eyes, right? The price came to our level of entry. Now, take a look at this amazing push back up. Take a look at this amazing push back up. Even though I was skeptical, you got a 200% in real time. Now, that's what I'm talking about. That's too much power. I'm telling you, man, these methods do work. So rinse, repeat this. You guys are going to be good to go. So if you followed my teaching, you could have made a 200%, which is more than 100% that you're looking for on a daily basis. So once you see that you get your more than 100%, close your trades. On to the next one. Do not really get infatuated with these. They're not going to give you 100x based on the features that we're using. Just be disciplined on a daily basis. Hit 100x and you keep it moving. Remember, the reason why you're going to be protected is because you're using Sniperoo. On Sniperoo, make sure you set up your trading stop losses adequately. Make sure you set up your stop losses and your trailing stop loss, all that and all that good stuff. So I usually have tutorials about Sniperoo. I've gone through this like a number of times. You guys already know the best settings and all that good stuff. So the reason why you're using Sniperoo is because you want to automate your take profits and your trading stop loss. If you had a trading stop loss of about 100%, right, you would have obviously been kicked out. Now take a look at this. This is amazing. This is a very good indication that our strategies do usually work. But be very careful, because this is not going to happen all the time, because there's always, that particular loss in momentum. Your trade has already been lost. But if you are patient enough and you wait for the block 0 sniper resistance support to be retested, this was a perfect opportunity and entrance, and you were able to make a 200%. We did it. There you have it, ladies and gentlemen. I really hope that everything was clear. I hope that you get the mathematics and the reasoning behind and how you can basically turn your $500 into 20,000 US dollars per month. So it's all about compounding. It's all about understanding the strategies that you can use and how to basically be able to manipulate it to your advantage. This is one of the reasons why all my students really like what I teach, because I usually go in depth, and my methodology is it can easily be reciprocated. You can easily fine tune my strategies because I give you the reason why things work. Once you identify why certain things happen and why certain things are able to produce predetermined outcomes, you guys are going to be able to tweak it. And this is one of the reasons why I do not like giving people fixed methods, like fixed filters, because people need to understand why certain filters are working. Why are we projecting that a lot of our investments are going to be going to about 250 to about 300,000 US dollar market cap? Why is it the top of our cap in terms of the liquidity that we expect? It's because of the formula that we're using. So such understanding is going to give you like a very good advantage over the rest of the competitors that you have, because remember, meme coin trading and just basically trading overall is a zero-sum game. In order for me to make money, you have to lose. So this is one of the reasons why you have to be equipped with the proper knowledge. Kindly subscribe to my YouTube channel, because I really put in a lot of effort, as you have obviously enjoyed, and I hope that you guys are going to continue supporting me. In case you've got any other questions, in case you want to be part of Sniper Academy, in case you want to be part of my community, just email me saying I want to be part of the community, and then we can hook you up and figure out what we can do. So yeah, thank you very much. I hope that you guys found this very exciting, very educative, and yeah, smash the like button, subscribe to my YouTube channel. I know a lot of you guys are not subscribed to my YouTube channel, so please do me a favor and subscribe to my YouTube channel. See you tomorrow, and hopefully I'm going to be doing live streams like in the next coming few, starting perhaps tomorrow. In May, we need to make a whole lot of money in front of people. So this time around, I'm going to be trading live in real time with you guys. Enough of the education, enough of the educative content. Now let's do practical, result-oriented type of content. So hopefully starting tomorrow, we're going to be live streaming together. So yeah, thank you very much, and see you tomorrow.